Welcome back to AlgoBot, where we break down automated trading strategies for MetaTrader 5 in plain, practical language. I'm your host, and today we're exploring an expert advisor called Internal Bar Strength Reversion. This is a mean reversion approach built on a simple but elegant idea, where a candle closes inside its own range. Over the next few minutes, you'll learn how internal bar strength works, how the strategy smooths it into an oscillator, and how it times counter-trend entries with a directional crossing signal and carefully scaled risk. This is educational content only, so let's dig in. So what exactly does this expert advisor do? At its heart sits a single, scale-free number called internal bar strength, or IBS for short. For any one candle, internal bar strength is the close minus the low, divided by the high minus the low. In plain terms, it answers one question: where inside its own range did that candle finish? A reading near 0 means the candle closed right down at its low. A reading near 1 means it closed right up at its high. Because it uses no price levels and no moving averages of price, this number behaves consistently across different currency pairs and different time frames. The strategy trades mean reversion, which means it looks for stretched conditions that tend to relax back toward balance. When a market keeps closing near the low of each bar, the strategy reads that as short-term selling pressure that may be running low. When it keeps closing near the high, that's the mirror image. Rather than fade a single extreme candle, the expert advisor smooths internal bar strength over a short window of bars into a gentle oscillator, then waits for that oscillator to recover back out of the extreme zone before acting. This approach is designed for traders who are curious about counter-trend and reversion techniques, and who prefer a clearly defined, rule-based signal rather than discretionary judgment. It runs on a single symbol and a single time frame, sizes its stop from recent volatility using the average true range, and sets its profit target as a fixed multiple of that risk. Everything you'll see is for educational purposes only. It is not financial advice, and like all trading, it carries real risk, including the risk of loss. Let's look at how the logic fits together. Let's walk through the mechanics step by step. On every completed bar, the expert advisor recalculates internal bar strength for each of the most recent bars in its window. The default window is 10 bars, set by the parameter called IbsPeriod. It then averages those 10 readings into a single smooth value, the oscillator that drives every decision. If a bar happens to be perfectly flat, with no range at all, that bar is treated as a neutral 1/2, so it neither pulls the oscillator toward the low zone nor the high zone. Now to the signals. The strategy watches two threshold levels. The lower threshold defaults to 0.35, and the upper threshold defaults to 0.65. A long signal appears when the smooth oscillator was below the lower threshold on the previous bar, and then climbs back up to or above it on the current bar. That upward crossing is the strategy's way of saying the downside pressure appears to be releasing, so it looks to buy. A short signal is the exact mirror. The oscillator was above the upper threshold on the prior bar, then rolls back down to or below it. That downward crossing suggests upside pressure is easing, so the strategy looks to sell. Notice the key detail. The strategy does not act simply because the oscillator is in an extreme zone. It waits for the recovery, crossing back out of that zone. This is what gives it a defined turning point rather than fighting a move that may still be underway. Risk is handled with the average true range, a standard measure of recent volatility. The stop-loss distance is set to a multiple of the average true range, 1.5 times by default, measured from the entry price. The take profit is then placed at a reward-to-risk multiple of that stop distance, also 1.5 by default, so the target sits farther from entry than the stop. On a long trade, the stop rests below entry and the target above. On a short trade, the stop rests above and the target below. The expert advisor holds only one position at a time for its magic number, letting the stop loss and take profit manage the exit rather than adding to an open trade. Let's read the actual MetaTrader code on screen, just as you'd see it in MetaEditor. At the top are the input parameters. IbsPeriod sets how many bars are averaged into the oscillator, 10 by default. Low threshold and high threshold, at 0.35 and 0.65, define the two zones the oscillator must cross back out of. ATR-period and AtrStopMult govern the volatility-based stop. RewardRisk sets the profit target as a multiple of that stop, and lots and magic define the trade size and identifier. In the body, the code computes the smoothed internal bar strength for the current bar and stores the previous bar's value in a variable called prev. That pairing is what lets it detect a crossing. Look at the two Boolean lines. The long signal is true when previous was below low threshold, and the smooth value has now risen to or above it, an upward recovery cross. The short signal is true when previous was above high threshold, and the smooth value has now fallen to or below it, a downward cross. When the long condition is met, the code reads the ask price, places the stop-loss 1 risk distance below it, sets the take profit at reward risk times that distance above, and calls trade.buy. When the short condition is met, it reads the bid price, places the stop above, sets the target below, and calls trade.sell. Both sides use the same volatility-scaled risk, just mirrored in direction. Clean, symmetric, and rule-based. Let's bring the logic to life on this illustrative chart. Along the bottom, you can see the smoothed internal bar strength oscillator, riding between 0 and 1. The green line marks the lower threshold at 0.35, and the red line marks the upper threshold at 0.65. The green band beneath and the red band above are the two extreme zones the strategy cares about. Watch how the oscillator and the candles move together. We open on the left with a run of falling candles. Notice how each one closes down near its own low. The body finishes toward the bottom of the range, bar after bar. Because internal bar strength measures exactly that, where the close sits inside the range. This steady stream of weak closes drags the smooth oscillator lower and lower. By the third and fourth candles, it has slipped down into the green oversold zone, below the lower threshold. At this stage, the strategy does nothing. It is simply noting that short-term selling pressure has stretched, and it waits. Then the character of the tape changes. A candle forms that closes strongly, up near the top of its range, reversing the pattern of weak closes. This single firm close lifts the smoothed oscillator, and it climbs back up through the lower threshold at 0.35. That upward recovery crossing is the exact signal the strategy has been waiting for. You can see the buy entry marker appear right where the oscillator crosses back out of the green zone. The expert advisor reads the ask price, sets its stop-loss 1 volatility unit below the entry using the average true range, and places its take profit target higher, at 1.5 times that risk distance. From there, price follows through to the upside. The next few candles build higher highs and higher lows, each closing firmly, and the market carries steadily toward the target. A few bars later, price reaches the take profit level, and you see the take profit marker complete the long trade. That is the reversion playing out. The market recovered from its stretched, weak closing condition, exactly the move the oscillator flagged. Now watch the second half of the chart, where the mirror image sets up. As price keeps pushing higher, the candles begin closing right up near their highs, one after another. Those strong closes drive the smoothed oscillator upward, and it rises into the red overbought zone, above the upper threshold at 0.65. Again, the strategy simply waits. Being in the zone is not enough on its own. Then the upward momentum fades. A candle forms that closes weakly, back down near its low, and that single soft close pulls the smoothed oscillator down through the upper threshold. As it crosses back out of the red zone, the sell entry marker appears. This is the short signal. The overbought pressure is releasing. The expert advisor reads the bid price, sets its stop-loss 1 volatility unit above the entry, and places its take profit target lower, again at 1.5 times the risk distance. Price then rolls over. The following candles print lower highs and lower lows, closing weakly as the market eases back down, and it travels toward the downside target. When price reaches the take profit level, the final marker completes the short trade. Step back, and you can see the rhythm. In both trades, the oscillator first pushes into an extreme zone. The strategy patiently waits, and only the crossing back out, the release of pressure, brings the entry. The stop and target are always framed by recent volatility and by that fixed reward-to-risk multiple. Of course, not every crossing leads to a clean move like these two. Markets can keep trending against a reversion signal. Stops do get hit, and losses are a normal part of trading. This chart simply shows the intended logic in an idealized form. Let's wrap up. Today we explored the Internal Bar Strength Reversion Expert Advisor for MetaTrader 5. We saw how internal bar strength measures where each candle closes inside its own range, how the strategy smooths that reading into an oscillator, and how it waits for a recovery crossing back out of an extreme zone before entering. Long when the oversold zone releases, short when the overbought zone releases. We also covered how the average true range shapes the stop and how the reward-to-risk multiple sets the target. Remember, everything here is educational information only, not financial advice, and not a recommendation to trade. If you found this helpful, please like the video, subscribe for more MetaTrader 5 strategy breakdowns, and leave a comment with a strategy you'd like us to cover next. Learn more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.